Good day, everyone. Welcome to a noise episode of Bitcoin moving up, altcoins going down show, in which we are going to discuss when you should be deploying your assets into altcoins and why I do believe that deploying your money into altcoins right now is not the strategy you should deploy, unless you are scalp trading, for instance. But in general, there's just no confirmation that altcoins are turning. And even in the recent move of Bitcoin, we see that altcoins are dropping down heavily against BTC and are showing weakness in general in the past period. And that's because markets have cycles, and within cycles there are smaller cycles. So in bigger economies and macroeconomic wise, there are huge cycles, and that's why you get euphoria right now in the stock markets, and that's why you get depression on the moment that the economy has to turn around. That's just how these cycles behave, and the exact same figure can be deployed from the markets we have in crypto, and it's actually a beautiful example on how these work. So the essential part is that you should be able to divide your portfolio the right way, through which you can determine which period you should be in Bitcoin or majors only, which period you can deploy a little bit more towards smaller altcoins, and when you should be deployed in USDT. And this is generally the period, and it has been for the past weeks, that you should not be invested in cryptocurrencies, altcoins at this point, unless the MAs and the market sentiment is about to shift, and that's what we're going to discuss today. Before we're going to discuss that, I would like to mention our own website, where we trade along with each other, where we educate you to become a better trader and investor, and we're going through some big changes in the coming period. Which includes that we can also do some offline stuff, but also consultancy hours and stuff. Going to be amazing. Next to that, there's an Instagram page where I'm posting a lot of stuff that I'm doing in my life. And one of these massive things is that I'm getting the keys for my new house today, through which we can start moving houses. And as you know, if I'm moving houses, the volatility starts to increase heavily into the market. So expect it to be a heavy move in the short term. Regarding Bitcoin, I've written an article on Cointelegraph earlier today in which I discussed that the 12K area is a crucial barrier we have to break through in order to continue this upwards movement. However, I'm not convinced we are going to do that at this point yet, given that we are approaching the resistance area, which is between 11.9 to 12.5, through no volume. So this whole upwards move is actually fueled by people that are selling their altcoins to jump on the BTC bandwagon, and that's not fueled by strong market environments. As strong market environments, then you can see that social media is exploding and that there is new money coming into the markets. That's just not the case right now. That will happen once we get the compression going. So when we get the range bound structure and we break 12K, then you can anticipate a large volume move, and then we're going to make that huge move towards 17K, and probably the rest of the markets will follow then along. So what I'm expecting is generally what I've been pointing out here earlier. I'm expecting to see a rejection in the area between 11.8 to 12,050, after which we reject 11.8 and get some further downwards momentum going, through which we can see some more range-bound movements. Are we going down further? I'm not sure, but I think we should be able to test the 10.6 area to get that range-bound construction and sideways construction further down the line, which would also mean that altcoins will have some further downwards momentum. And given the downwards momentum, we can start deploying some analysis on what the markets are giving us on the Bitcoin dominance. And what we can see is that the Bitcoin dominance has been going up in the last quarter of the year. So here we have August, September towards December. We see that we've made a rally up from 50% to 71%. We can also see that we've had a rally up from September to December in 2018. That was during the period that Bitcoin crashed down. So the dominance went up as altcoins dropped further down the line. Another one we can see here is actually January is another run up from October towards December. That was during the Chinese stuff, I guess. So weakness around the markets. And what we can now see is that we're again running upwards on the dominance through which we can deploy that given the history. And we also know this from Ethereum against BTC. December and January are the periods that you want to deploy money into towards altcoins. And now you want to be safe by having Bitcoin and USDT. Then you are exploiting yourself towards almost no risk if you do it equal. And you can still scalp trade altcoins, but the majority of your portfolio should be in defensive assets if we can conclude that there are any defensive assets. But if you can sharply analyze this, you can see that there's just periods that altcoins do well. One of the periods that they do well is January towards March. Then there is a period that they will not do well, and then the second round of party starts in the summer, and then the fourth quarter is usually just a bad period. So based on this, I'm going to assume that the dominance will run up further. If Bitcoin starts to run up, I assume that Bitcoin will drain the movements out of the altcoins, so the altcoins will drop down further. And if Bitcoin starts to drop heavily, I think altcoins will continue to drop as well. One of those things is Ethereum against BTC. That's another major indicator. And what we can see here is that, I will just put it on a daily, is that we're losing a significant support level. So we have discussed this, in which we say, okay, we've got many tests of this support zone. And right now, we fail to hold the support zone through which there is weakness. And there's two levels that you can deploy as potential supports, which is around 2.8.5, but the main support zone is found around 2.6. And that's not bad, as when you zoom out and take the weekly, you can actually see that there is confluence coming around. And I'll just take another one, which is providing me more data. There's confluence coming around, as the 200 week MA is also lying beneath us around the level that we're targeting, right? And given what we've just discussed with the Bitcoin dominance, we can also show that in 2018 Ethereum found its low in December, 2016, 2017, same case. This is 2017, sorry. 2018 low in December, 2019 consolidation, retest of the low made in September, retest in December, and then the impulse wave starts. So we do see the impulse wave, which frequently happens into the summer. We just saw it here again, and the most likely case is that we're going to retest this area. I'll just make it a little bit less big. Retest this area, which deploys the long entry we want to have, as then we can establish a new range bound construction. What we see is that we've had 1 year of sideways range bound construction after we've had another year of sideways range bound construction, in which we lost this range, established a new one, and now we're seeking for the range high resistance to become support, which is around 2.5, 2.6, maybe even 2.8. If that becomes support, then we can continue starting to test the range high around 0.4. And we can make that new range bound construction, which is actually bullish, as that would mean that we are back into this range. If we do break 0.4, I'm going to target 0.6, and I'm going to target 0.8 or 0.7. These levels are which I'm expecting us to see rally through, but for now we are still correcting, and there's no sign of any momentum up. Based on the daily time frame ETH/USDT, we can see that we've got a significant resistance zone, which is around 380 towards 395, which does not look like we're going to see a breakthrough of that level at this point. We're just consolidating. If we do break this 380 to 395 level, I think we're going to test 440, but based on the weekly time frame, we can also say that we've got a rising wedge construction here, through which a retest of these lower zones would not be unlikely and very healthy for a market, as we have just rejected here. So my conclusion is from this video that it's very likely that we're going to see some further downwards movements. I'm not expecting Bitcoin to be making that breaker above 12k. At this point, I do believe that we're going to consolidate a bit more. If we do make the breaker above 12k, then there's the level around 13.8 and 17k, which would drain the momentum in altcoins. If we reverse here, it would also drain the momentum in altcoins, as Ethereum is the one you should be watching, and the target points for Ethereum, I think it's going to be December and January where you should be deploying money into towards altcoins. Thanks for watching and have a great day.